So in light of the fighting in Syria and all the other things that are going on around the world, defense companies, you can see them right on the board, had an amazing day. I mean, all of these names have exposure to the region in one way or the other. So is this an opportunity to make money? Back with us is Shah, Gilani, Capital Wave Forecast Editor, and Steve Cortes, BGC Partners Trader and Senior Strategist. Hey, Steve, let me start with you. And we've talked about this over the last year or so on this show, being invested in this space. For some, it's unseemly, but the fact of the matter is that we are looking at a world that's going to become progressively more dangerous, particularly if America does not stand up for something or someone. How do investors go about taking advantage of that?
Charles, and you're right. We've been consistent on this theme, and I still am. I like defense. Defense wins Super Bowls in football. I think the defense sector is going to do extremely well and has done very well in the equity markets. For 5 straight years, Lockheed Martin has outperformed the S&P 500. I think it will continue to. Way back in my high school Latin class, I learned about the Pax Romana, the Roman peace, when that superpower kept the peace throughout the world. In our lifetime, we had the Pax Americana. Sadly, that seems to dissipate now as American leadership wanes. You're exactly right. The entire world is in an arms race, whether you're talking about Asia or Russia or the Middle East. That's too bad for the world, but it's good news for American defense contractors.
Shah, how would you invest in this sector, or would you invest in it?
Well, I'm hopeful that I don't have to invest in it. I'm hoping the things don't escalate in Syria to the point where we want to be betting on defense companies. But I agree with Steve. Lockheed Martin has had a tremendous run. It's got a 3.18% dividend yield, so it's a terrific company. In this space, though, I think the better performer right now is Northrop Grumman. That stock, the performance has been solid. The dividend's about 2%, but that has been the actual star in terms of strength in the defense sector.
There was a report out today the Pentagon may either play hardball with large contractors or pull some of the money from these larger contractors. Late in the day, Lockheed Martin said, listen, there's nothing to this. Maybe with the political environment that we have, would things change, though, let's say, of a Democrat one, of a Hillary Clinton one, or Bernie Sanders? It seems to me that if you think Obama is weak on foreign policy, they probably would be weaker.
Well, I think the hope for the defense companies, and certainly for America, should be that we have some Republican administration in there and we strengthen our defenses, because that's what we really need. The spending has been cut too drastically, and I think we need to do an across-the-board strengthening of all of the military aspects and assets we have.
Steve, one last comment.
You know, Charles, I'm one of the few conservatives who think we should cut defense spending. It is still big government, but that's not going to happen. There is bipartisan agreement right now. If anything, defense spending is going up.
Yeah, I think the idea, too, though, is, we've got to use it.